Good morning. Hope you guys are well. Wonderful. I hope I'm audible. And then at least we are also recording the class. I hope I'm audible. So, minute, guys. Yeah, so I hope now I'm audible. So I think we are 6. There are more coming. So just guys, give me a minute. There had 10 more joining for class. So we said we'll be having our classes on Thursdays and on Tuesdays. So okay, let's begin. I do have echo. You can hear me, guys? No. I hope you can hear me. Phil, can you confirm if you can hear me with your Zoom? Can you join Zoom a little bit? Few minutes on the other end. Yeah, I think we are good. So you're audible. Oh, thank you for the response. Thank you. That's all I needed to know. So let's begin today's class. So last time we did a session on why we trade Forex. So today now we'll go deeper on what really Forex is. So let me open my screen. Give me guys a minute. So there's an minute, guys. Admit, yeah, guys are joining. Thank you guys. So today I'm going to go into what is really Forex. Like in general terms, we did an introduction of why and why we usually trade Forex. So today I'm going deeper on what Forex is all about. So let me join baby peeps. I have 2 materials here. If for the online class, guys, you can enroll here. So let me share my screen. So here we are. So this is one of the best learning sites. So a minute, guys, a minute. If there are more guys, admit them. Okay, I think that's okay. So let's begin now. So I think most of you guys out there, you are in some form of business. Or for example, you have to use money. I don't know why. A minute, guys, I sort this. So great, let's begin now. Oh, there's someone else here joining. So okay, so I'm going into deeper of how Forex works or what it's all about. So, and I'm also going to be showing you examples. So it won't take much time. So that now at least we tackle what happened yesterday. So we had the offline class yesterday. It was very successful. So let's now at least do something for today. So a minute. So the main thing of what Forex is all about, as I open the link, countries usually do business with each other. For example, we Kenya, or where we are situated, we are doing business with other countries. So when we do those business, what basically we are doing, we are doing something we call global trade. So global trade is whereby, for example, we are a big exporter of coffee or tea. So I'll be giving you good examples so that you guys can be able to understand. So the reason we'll export coffee or tea, that's our main cash crop here. So when that coffee or tea is exported out there, so we are paid in euros or dollars. If we export coffee or tea abroad, the money hits the bank account. Of course, we won't be paid in shillings. We'll have to be paid in in dollars or euros. So when that money hits the bank, we have to get a good conversion rate. So basically, the moment that exchange happened, we have taken part in the Forex market. So that is one example. Another example is you yourself. You might be willing or want to buy a car in Japan. The moment you do that, what will happen is that basically you'll have to buy that amount in, that car in dollars. When you do that, you'll have to talk to your dealer in Japan. So you have to convert your shillings. So when you go with your shillings to the bank or the bureau, you usually see a buy and a sell. I think you'll see a buy and a sell. So when you go to the shilling, these guys are going to sell to you dollars. So you'll be looking at the sell option. And then if you have your dollars, they'll be buying to you. So you're looking at the buy option. So the moment that happens, you've taken part in the Forex market. So basically, what is Forex? It's basically the global financial market that will allow one to trade currencies. So I'm going to show you an example. So I'll be using my chart as we continue. So I hope guys you're following. So this is GBP USD, is one of my favorite. So, and then you can see I have other pairs here. So all I'm doing is just showing you how Forex really works. So you can see this is the bid and this is the ask. So Forex usually is a quote. So banks, everyone has a quote. You realize it keeps changing. So depending with who has the best quote. When we are looking at the bid, we are looking at the price that the broker market is willing to offer you. Then when you look at the ask, we are looking at the price that we offer. It's called the offer price. So bid is the price you're getting from the market. This bid here, guys. Then ask is what you're offered. And when you see the difference, you usually call it a spread. So I hope guys you're following. A minute. So let's go back. So basically I was saying it's the global financial market. So in Forex, we are basically looking at the whole global trade. If you think of one currency will be stronger versus the other, you'll of course be correct. So if I come back to my example again, here, if I come back to this example, like this area. So if I thought that the pound is going to do well, of course, I am usually buying into the market. If I think the pound is going to do bad, I'm selling into the market. So I'm just explaining. So when we are looking at pound, we are looking at the UK doing business with the US. So these are some of the two powerful economies in the world. US is the biggest economy in the world. So you will look at the trade relations these two countries are having. For example, what does the UK import, or export to the US? And what does the US export to the UK? So that is usually under global trade. So I hope guys you're following. So once upon a time we had a global pandemic. You know what happened last year, COVID, things are going more digital as we talk. So also another thing, if you have traveled to another country, you'll find a currency exchange booth. Then exchange that money you have in your wallet to that country you're visiting. So what will happen? An exchange, you go to the counter, you notice the different screens. So I was talking about that screen. When you go to a bank or you go to a bureau, you'll be able to see a red screen. You always see those currencies there. So that is to mean that you always have to look at the price to see which price you're getting. So an exchange rate usually is the relative price of two currencies from two different countries. So also guys, if you have questions, you can always text me or just leave a message. I will get back to you immediately. So you have exchanged one currency for another, or in Forex trading term, you are American visiting Japan, you have sold dollars and bought yen. So before you fly back home, so if you are a tourist, for example, they come here a lot, and then once they land at the airport, they cannot do business here in Kenya with dollars, or if you're in Japan, they cannot do business in dollars. They have to change Japanese yen. So now we'll be looking at the exchange rate for USD yen, this one here. So you'll go there, you'll be able to see 108.1310. So now this usually is the buy price. So if I'm having dollars, of course I am buying into. If I have Japanese yen, I am selling into. So the difference here we are looking at is now what, of course, we come in, we are going to make something, or we are going to make some good. So what is Forex? Basically, it is the foreign exchange market. We usually call it FX, or in other terms, Forex is usually the largest financial market in the world. So it is usually a global, decentralized market. This is to mean all the world currencies change hands. So, and then these exchange rates change by the second. So they usually move very, very, very fast. So only a tiny percentage of currency transaction will happen in the real economy involving international trade and tourism. So also another thing I want you guys to understand is that most of these currency transactions that are occurring in the global foreign exchange, whether you're buying or selling, is usually speculative. Means we want to speculate, how will this economy perform? How are we going, or how are they going to do in the long term? So if you're looking, for example, at the US, if their jobs will be better, or the job rates, unemployment or employment will be better, we are looking to buy into that currency. So let me also explain it on another term. So this is how much it's moved. So we know right now we are at almost 7 trillion because the volumes have gone up, the volumes for trading. So you can see here we have 6.6 trillion that is traded on a daily basis in the Forex market. But I believe these numbers will keep going up. So you can see, so let's keep moving. So then I need also you guys to understand, it's very difficult to determine the exact size of the retail segment. We also have guys who call the retail market or the retail segment. That is the normal guy doing probably 1,000 or 500 or 3,000 USD. So these guys, we call them, they fall under something called the retail market. They usually make up between 3 to 5% of the market. So it's also open 24 hours a day. So that means 5 days a week. And the trading usually shift from one trading center to another. So let's look at the centers. I think I had covered them in the last class we had. So yeah, it's here. So we have the centers. We have London, we have New York, we have Tokyo, Zurich, Frankfurt, Hong Kong, Singapore, Paris, and Sydney. So what happens is that trading shifts. If these guys close for trading, it's not that it's going to close, it's going to shift from one financial center around the world to the other. So let's go to another very important thing before, yeah, so you can see we have Singapore, Frankfurt, London, and finally New York. So then all over again, we're going to start again in New Zealand. So, and that shifting keeps changing until one, so the market will usually close around Friday with the New York. Then we are going to restart again on Monday, probably around midnight our time, or Greenwich time. So let's say we are looking at money. So basically all we are doing is trading money. So you can see I've showed you this graph here. This is the pound versus the USD. So we are looking at the pound doing, or the US doing business with the UK. So if they're having good relations, so I have zoomed out, at least guys you can see, then probably I'm going to put a line down here, that one. We usually call it the support. We have another one up here, the red line, we'll call it the resistance. So basically I'm only looking at the highs and the lows. Basically, how is their relation coming? So one currency, you realize, will always be stronger than the other. So we are looking at the different in prices, or we are speculating that one economy will be doing better than the other. So of course, other countries are doing better than others, depending with the management, depending with the policy, the government, and even the people. So this is one good example of two economies that are doing well. So sometimes the pound may be stronger, sometimes the dollar may be stronger, depending with how their business relation is moving. So basically, all I'm saying is, the only thing, if you are asked out there, what are we, or what business are you in? What are you trading? The answer simple is money. And because you're not buying anything physical, trading can be confusing. So all you're doing, you're trading money. So think of buying a currency as buying a share in a particular country. So let's say, for example, Japan. We are looking at, they are the biggest manufacturers of cars. Nissan, I know these are the Toyota also, I think it's a big company. So we're also looking at the manufacturing we are looking at agriculture, we are looking at service industry. Most of the technologies are also coming from this country. So what are we doing? We are looking at the yen, for example. Their currency is the Japanese yen. So if that country is going to do well, we speculate probably in the next few years, they are doing okay. That is to mean if they'll be doing fine, you are looking to buy into that currency. Let me give an example of a company like Safaricom. Safaricom is one of the biggest companies doing very well. So if they started 10 years ago and you as an investor, you are like, this company will do well, you would have bought a share into that company. If they do well, of course, you're going to make a profit. You'll be earning some dividends every year, and also you'll be having an ownership with that company. Which other company? KPLC also. I think the electricity, they're also a good performing company. The reason is why you cannot do without electricity. That is to mean you buy an ownership of that company, of course, you'll be making good profit. And also the company is growing. So this is basically a good example. So we are looking at buying a share into that country. Now we are looking at that country like a company. So that means we have to understand all the affairs that happen in that country. The most important ones is the government policy, their interest rates, their employment rates, and so forth and so forth. So guys, mute your Zoom here. I'm hearing voices in the background. Okay, thank you. So the price of the currency usually is a direct reflection of the market's opinion on the current and future health of the respective economy. So just looking at the exchange rate. Yeah, Boniface, welcome. Exchange rate alone, or basically we are looking at what's the opinion? We call it sentiment. How do we understand sentiment? We need to understand how healthy or how unhealthy is an economy, or depending on how they are basically performing. So that is to mean, if for example, I look at our country, Kenya, we are looking at the dollar versus the Kenya shilling. At 109, we need to understand what moves that price. If of course we are doing well, the price will go lower. If you look at it at 103, most likely economy has started improving. If it goes higher, 110, 111, I think last year it hit 111 or 112, that means things are not really good. How do we look at it? We're looking at employment and manufacturing, business, exports, imports. All these things are what will determine this price. So we are looking at that country the way we look at a company and the performance of this country. So my main point here was, apart from trading money, that price alone that is reflecting will be able to tell us the health of this economy. Are we doing good, or where are we headed? So we are saying Japanese yen, you are buying into the share of the Japanese economy. I think I've explained that very clearly. So you're betting that the Japanese economy is going to do well and will even get better. So that is what you're betting on. So you're betting that the Japanese economy is going to do well. So once it does well, of course, you get some good greenbacks. So once you do that, you sell those shares back. So let's say it did well. This is another example. So you see, this is the pound. So if you bought into the pound, this was sometime, I think last week. Yeah, this is last week, but one. If you had bought into the pound and it did well, then you sell back those shares, of course, you'll be making a very, very nice profit. So the idea is we are always looking and speculating, how are these economies doing? What's their policy? What are their tariffs on goods? How is their retail level? How is their consumption? Because consumers are very, very important in an economy. Without consumers, we cannot be able to create money. So in general, the exchange rate of a currency versus other currencies is a reflection of the condition of that country's economy. So that one I've expounded very well. So this will be some of the currencies we'll be dealing with, or the major economies. I think I've here, they're called the major currencies. So you can see we have CAD, that's Canadian dollar. So I think it has really moved this week. So before we continue, let me show you guys what happened this week. Where is that link? Yeah. So we always have a calendar, an economic calendar, where we are able to track how these currencies are doing, or basically we are able to know what really is happening. So I think we had some news yesterday on the CAD. So let me go back. Today is Thursday. So let me just pull out the whole calendar for the week. So at least you guys can be able to understand. So these are some of the things we will also be learning to understand how these economic events, how basically they. Yeah, Brian, welcome. We're having more guys joining. So karibu sana, karibu. So let's continue. So I was talking about the CAD, CAD. So yesterday was Wednesday. Yeah. There was the monetary, the BOC, or the Bank of Canada Monetary Policy report, and there was also the BOC rate statement. So I saw some guys really made a good killing yesterday. So they were trading this CAD. So if you got in at the right time, let's go probably to the chart, have a look at what the CAD was doing. So this is the chart. Okay, just a minute, guys. My system is a bit slow. So let me take it from the online chart. So let me check it using this trading view chart just to see what happened yesterday. So the idea is we just need to know what really went on. So let me just explain what happened. So this is basically the monetary policy statement. This is the central bank. They are weighing the interest rates. They will either raise them or lower them depending with the economy and inflation. So we will basically provide an insight into what the economic condition and inflation is of this country, since now we are looking at Canada. So these are things we'll be learning, you guys, as we continue. So I'm just introducing to you slowly by slowly what we'll be doing. So of course, if you got in, let's have a look at this chart. Where is the chart? Yeah, the chart is here. So let's have a look at USD CAD. So when I'm looking at a country, mostly I'll be looking at that country with the major. The major, of course, we are looking at the dollar most of the time. So just a minute, guys. Let's open my chart here. Okay. So it's a bit slow, but so I want to look at USD, Canadian yen, or anything with the CAD. So let's have a look at it. Just a minute, guys. Oh, here. So Edwin, welcome. So let's search for USD CAD. So minute, guys. We are looking at USD CAD. USD CAD. So I'm just pulling out the graph. All of the windows. So, minute, guys, I'm opening. Yeah, it's opened. So this is the card on the one. So let's look at it on 1 hour chart. So this is 1 hour chart. So kindly mute your. Ask them to mute here because they're not hearing. So this is the card. You can see, guys, look at what happened. So there was a big drop. The red candle. This was a very big drop. That's why I was saying, whoever was in, of course, now here you are looking. So the dollar lost against the Canadian currency. So minute. Okay, I think we are good now. So this was the drop. So the dollar lost against the card. So if you got this news before, or you are able to understand how the calendar was, of course, you are shorting. Going short means you're selling. Going long, you're usually buying. So this is just a typical example. So I'm just giving you guys a little feel of what we'll be doing or what we'll be going through as we continue. So the idea is you need always to time your entry. Time a good entry. If you got a good sell or short here, you'd have made some very good, nice pips. You can see this big drop. So on this big drop on this USD card, this is on the 1 hour chart, you'd have made a very, very nice return. And that would have been a very good day. You'd be smiling all the way to the bank. So this is card. Then we also have the Great Britain pound, or the GBP. Then we also have the euro. So the euro, I really love it because I'm always following mostly the euro USD. It's one of the most volatile, the most traded pair in the markets. Then we have JPY, Japanese yen. We have NZD, that's New Zealand dollar. We have AUD, that's the Australian dollar. Then we have the Swiss franc. Then we also have United States dollar. So one of the most important currencies, guys, will be really tackling is the USD, the United States dollar. And then I want to give you guys the reason as to why we'll be paying close attention to the USD. So these ones I've told you, from the CAD, GBP, Euro, JPY, AUD, New Zealand, Swiss franc, and USD. We call them the major currencies because they are the most heavily traded currencies in the world. So, and then Forex traders differ on what they consider as major currencies. So you can see them. Then they label AUD, NZD, CAD as commodity currencies. Like the CAD mostly is pegged to oil and how the price of oil is moving. Why? Because Canada is one of the big producers of oil. But those ones will do something called correlation. Correlation, we have intermarket correlation and we have currency correlation. Intermarket is whereby a pair can be correlated to a commodity like oil. Intermarket is whereby we can look at the futures and how they are correlated to the currencies, but those ones will come later. So I won't go much further. Today, I just wanted to know why or what we trade and how we trade. That means we trade money and how the exchange rates happen, so that you understand in a deeper meaning how these usually work. So these are the symbols, as you can see. This is the USD, it's at the United States. The currency is the dollar. You can see the nicknames, euro, and the rest and the rest. So some of this you will be reading ahead. So as I'll be giving you guys more assignments. So I hope all of you are in the WhatsApp group. We have a WhatsApp group for the class. This is where I'll be updating you guys and giving you all the notes. I'll also be sharing some videos for your learning on your end, especially the entries, the practical bit. Most of these I'll be sending links from our YouTube video. We have recorded them, most of them. So apart from this live class, we'll also be sending you more materials, both on PDF and on video. So I think we are almost done. So any questions, guys? At least we have been able to understand the currencies, some of the countries we also will be dealing with. We have also been able to understand how we buy and sell the currency pairs. I think I've been able to show you how this happens using this platform. We call it a MetaTrader or MetaTrader 4. So there's also, this is Japanese yen. Let's go back to, for example, so I think I've been able to explain this. And I've also been able to explain what happened this week. So you're always looking to buy when the economy would be doing well. When things are not doing very well, so you're looking to short. Or if one currency is stronger than the other, you're looking to short that or sell that pair. So guys, I need to know if you have any questions. So before I am done in the next, say, 10 minutes or so. So how do we buy and sell? So trading is usually simultaneous. I'm buying into the euro and selling the dollar. This, for example, a good example, the euro and the US dollar, or the British pound and the yen. So I am basically, I'm buying and selling at the same time. This is, for example, imagine it's a tug of war. One is moving, is pulling this side, the other one is pulling this other side. So we are looking to know who will be stronger than the other. Of course, whoever wins that tug of war is the currency that will be able to be stronger than the other. So we have majors, crosses, and exotic. So majors are these ones. You can see them. So these are the main pairs I'll be really focusing on in our class. The Euro USD, we have the United States and Japan. You can see most of them are either the dollar against this country, the Eurozone against the dollar, Japan against the dollar. Look, United Kingdom against the dollar, Switzerland against the dollar, Canada against the United States, Australia against the United States, New Zealand, they're usually around 7. No, they're around 8. So these are the major ones. So we call them the majors, is what I'll be mostly dealing with. We'll also be doing a lot of analysis on them, but that does not mean we'll not look at the rest, because most of the time, as I've told you, we will be guided by the calendar or the economic calendar of what's happening that week. So for this week, or for today is Thursday, before we are done. So I'm seeing we have euro. So you look at this euro, these are high impact monetary policy statement. So this is looking at will their interest rates remain the same. So I don't think they will change, because down here you can see these are called the central bank interest rates. So last year, I believe you guys know, COVID happened. They had to cut the interest rates almost near to zero. You can see CAD was 0.25, New Zealand the same. I think they cut all of them. So as we continue, as we start getting into technicals, especially on our class next week, I'll be showing you guys these events and how they happened and the impact they had on each of these currencies, so that you're always able or aware of what is happening. Because the idea with the market is more of information. If you got the information at the right time, of course, you time your entry, you'll get in and you'll make some very nice pips, or some very nice pips are converted, they become cash, because all we need is pip. So what is pip? So guys, that will be assignment. So you'll tell me next time as we meet what a pip is. So guys, we have also some PMI. So these ones I'll be tackling them especially as we continue. So I just wanted to introduce you to this economic calendar. You can use Forex Factory. And then there's also another unusual called investing.com. Either way, the idea is we need to always know what's happening during the week, and at least to be able to be ready when it happens. So I think for today, I have less than 4 or 5 minutes. So these 5 minutes, guys, now I'll want you guys to ask questions. So all I was tackling today was what is traded in the market, or what really do we trade, and also not just what we trade. We also are looking at buying and selling of pairs. How does it really happen practically? If you meet someone out there and asks you, what really do you do? You'll be able to tell, or you'll be able to tell them, this exactly is what I do. So I think with that, so guys, now I'm waiting for questions. We have less than 4 or 5 minutes, then we'll be done. So we have also recorded the class. So I told you we'll be recording it and sharing, because I believe we are very many in that WhatsApp group, and I'm seeing we are almost half. So I'll be sharing as we keep adding more and more guys to class. So we'll be having it. We'll be having two sessions every week. It's roughly an hour. I can see I started at 11. It's almost noon. So unless there is no question, I'll be following all of you guys via WhatsApp. I'll also be doing a follow-up to your trading journey and how far you've gone. So with that, I think I will call it a day. And I also want to say thanks a lot, guys, for attending today's class. Also, if you have a friend, I've shared, I think, how you have gotten the link. Just save this link. It's the same link we'll be using for our session or our class. So because our class will be starting at 11, exactly 11. So today we were late a little bit. We started at 11:15, but it's because I had not communicated earlier on the link. So at least we'll be having it for a month or so. The idea is to establish consistency. So for you to be profitable in the market, or for you to be consistent, is all about establishing something we call consistency. Consistency means you can get into the market and you can make nice pips without having issues. So most of the guys are usually losing. So we'll also tackle why most people are losing. So we'll come to psychology. We'll be able to understand what it is, how each of us were created, why you are a day trader, why you are a swing trader, or whichever type of trader you are. So at least I've tackled the pound, the USD and CAD. I've also tackled the Japanese, the pound USD. So I think with that we are good. So unless there's no question, I'm going to share a link, guys. If you're on the WhatsApp group, please, a minute, guys, before we end our session. So there's a link I'm going to be sharing, some of these entries and exits, also how to be using our app. I'll be using all that. So I'm going to share, there's a link I have right now. So if you're on the WhatsApp group, this is at least our first assignment. So I'm going to share it so that at least you can be able to understand how you make those entries and how you make those exits. So I think, guys, we are good to go. So unless you have any other questions, I think I can call it a day for today. So guys, do you have any questions? Not really. We have less than a minute, then we are done. So guys, thank you so much. Thank you. Thank you so much. Okay, thanks. And dance. Thanks guys for attendance. So I'll be looking forward to seeing you on Tuesday. And then and also need you to prepare